PE ratio, price to earnings ratio, is probably the most popular, most common way to value a stock or an index like the S&P 500. And so that's what we're looking at on here. This chart comes from JP Morgan, and it shows the forward PE ratio for the S&P 500. So forward PE ratio means this is taking expected earnings over the next 12 months and comparing them to the current level of price. That's what this grayish line on here is plotting. Now, this gives us a little bit of history. This goes back to 1994. And so you can see how this line has evolved over time and where we are currently. So the latest valuation measure ratio based on the PE has us at 22.4 times. That is well above the 30-year average of 17.1 times. So you can see the average is this middle dashed line going across the chart here. And then this plots one standard deviation above and below that average. So you can see we are approaching some interesting levels here on the forward PE ratio. One, we are right back to slightly took out the highs that we're seeing in the PE ratio at the peak in 2021. So we're right at the level where the stock market reversed lower at the end of 2021 and went into 2022's bear market. That's what the subsequent drop is here. And we're only below levels last seen during the last big bubble in the stock market, which was the internet bubble in the late 1990s. And so you can see where we are relative to that bubble, approaching those levels. So, this is one valuation measure that is well above historical averages and is approaching levels that, looking back historically, at least over the last 30 years, has marked a major peak in the stock market.